All right, good morning, traders. Welcome to this live stream. It is October 19th, 2023. We're going to look at some assets here. First off, we're going to take a look at Bitcoin. Bitcoin trading at daily resistance right now. It is also trading at that quarterly supply zone. So that's a very important zone for Bitcoin to clear. Like to see it cleared on a weekly closing basis, as you've not been able to close a week above that level since we broke down below the level. So it is a very important level for Bitcoin to close this week. It is just Thursday, so there's plenty of time for that to happen. Not a lot on the docket for today as far as event risk. We've already had initial jobless claims, which was a beat. Should have been bullish for the dollar, was not. Philadelphia Manufacturing Index was a miss, so that should be bearish for the dollar. It is. We do have existing home sales coming up at 10 o'clock a.m. Eastern Standard Time. I don't know if we'll be live that long or not, but if we are, we'll look for something. Currently, right now, there's not a lot to do. If you want to short Bitcoin, I don't advise it. You are, as of right now, on the daily and weekly time frames, you are bullish. Remember, anytime that you're back above the 21 on the 21 exponential, you look for bullish entries. Basically, Bitcoin retested weekly demand and it bounced from there. So that is a bullish move. That's the level that we were watching for a bounce from. That's the lowest level we wanted to see a bounce at. We got the bounce there, and now we're trading well above these previous highs in here. So, I mean, we have completely priced out this breakdown candle. That in itself is kind of bullish, but at the same time, you just got to be careful out there because there's so much risk as far as global risk is concerned. We got oil trading pretty high, and the dollar is trying to regain its bullishness, but it's struggling today. It's down 0.25%. You can see that yesterday we tested the 21 exponential moving average, taking out the previous day's low and then getting a bullish push. However, resistance is right there. So, I mean, essentially today, this morning, or last night when the candle opened, it tested daily res right there and dropped. So I'm kind of watching to see if we get a test of this supply zone right here at 106,256 on an intraday basis, and do we bounce from there? On the futures side of things, I have already taken the liberties to draw out the ES levels that you should be watching for potential trades. First price on the low edge of the expected move, 43.16. Top edge of the expected move for today's range, 43.80. Now for tomorrow's range, I priced it in because the Fed is going to be speaking today. Powell is going to be speaking himself. So with the upper edge of tomorrow's expected move be 43.96, whereas the bottom edge of tomorrow's expected move 42.99. So currently, all we've done so far is taken out today's high. All right, today's high. That's it. So let me see here. What are we on, the 2-minute? Yeah. Today's high was 40. It was 43, 48, 75. Yeah, 43, 48, 75. So that's roughly right here. All right. So essentially that's it. That's it. That's all you've done. You've taken out yesterday's high, or this morning's high that was made last night, I should say, not this morning, but was made, and now you're trading in the middle of the range, of the expected move range. Now, current thesis would be to look for shorts because of yesterday's trade. You got a breakdown below support. You are currently trading under the 21. You are currently trading under the 50. You've had multiple tests to try to trade above the 50 and get some bullish momentum and was unable to do so. The last time we got above the 50 on the RSI was all failures. So this time we're even lower on the price scale. And you can see there we got up to June CPI. And that's essentially where we rolled over. created daily res. That daily res held, but I find it funny that the market is literally trading, bouncing in between the CPI numbers. June is when we started to see the bump from July. That's literally when we went from 3.0 to 3.2. Then this one is when we went from 3.2 to 3.6. Notice how we immediately dropped. Then we came back up, stopped all the people out that had gotten short for CPI at the top of the day, and then just simply rolled back over. CPI here. I mean, and there you go, right? Old 4-hour support. We can get rid of that. But I'm just saying, like, it's very odd. And that's what we have. That's how the market's going to trade from now on. It's going to be a data-driven market. And so far, I mean, it looks like we have a lower high, but we won't know until we make a lower low. So the objective or the thesis remains the same, bearish, right? Bearish. But you can't take an entry here because you're in the middle of nowhere. Nowheresville. You're right in the middle of the range, the expected move. I currently do have open positions for any new people watching. Welcome. For anybody that's not new, welcome back. This is a real money funded account. And at any time, if you wish to see the trade list, future history, whatever you want to call it, I will show it to you because I am transparent. And I do want to show you that you can make money trading, that it is real. It's not just a joke. But here are the current open positions that I am holding. These are all options trades. This is a short January 16, 46.50 call. That position is currently up. And then it's 92 days out. I'm not going to hold it 92 days. In fact, if we get a bullish pop today, I will probably close it because it'll cause the P&L on the day to be red. I have an Apple put position where I sold the put, bought a put, bought the in the money 185 put, sold the 180 out of the money put. Both of them are in the money because Apple had a down day yesterday, and I got the same put spread. It's just an in-out spread or a vertical spread. If you don't know what a vertical spread is, you can check it out. I got a video on the channel. And then also I put on just a long put on XLU. So obviously I'm bared up, and I need to get some long plays in there basically to cover up for all the shorts that I have, but I haven't found anything yet that I wanted too long. Excuse me. Let me move this, move that, and let's see. All right. Good morning. Good morning. If you think Bitcoin ETF will be approved in January, well, if there is a Bitcoin ETF approved, I'm sure Bitcoin will get a bullish bounce. I mean, just if you break the fake news that Bitcoin got an ETF, it bounced. It's simply, I mean, people are going to buy into that, right? They're going to buy into it. Now, obviously, all the companies that are applying for Bitcoin ETF, like if you're looking for new inflows based on that, trust me, the company already owns the Bitcoin. They had been buying Bitcoin for years before they decided to try to come out with an ETF. So I don't think we'll see like a ton of liquidity flow into Bitcoin based on the fact that they have to now buy Bitcoin to open the ETF. That's already been done. Now, will that cause an inflow of fresh Bitcoin from customers who want to put some Bitcoin in their portfolio? Yeah, we could definitely see that. We got the halving coming up next year. Obviously, the halving has always in Bitcoin's history been a bullish event. However, we are at a high interest rate high interest rates. We are high inflation. So we're in an environment that Bitcoin has never seen also. So a lot of people are thinking that the halving is probably not going to have the effect that it has in the past based on those two issues. Also the fact that there is, a couple wars happening right now, which isn't really good either. So, I mean, pretty much when the atrocity took place on last Saturday, everybody assumed that the markets were going to gap down, right? Massively gap down. That did not happen. So I mean, it did not happen, and that's all I can say about it. If we go look at yields are coming off today. The dollar is going down. That all would, in a sense, say to look to buy support, right? Even though you have a bearish bias on the near term, everything that's currently happening in the market would say to be looking for bullish entries. If we go look at the TLT took out the lows yesterday and closed higher, but is gapping down. But I mean, intraday, if we go look at it, it's had a nice move up. So it's just been trending lower and lower and lower. And at some point, I would assume that risk would come into the marketplace. Like, the bond market is broken and people are sitting in massive losses. Why is the S&P 500 up so much still? Well, that would be tech. I mean, I'm sick of hearing it. I'm sick of talking about it, but it is the truth. These assets right here have such massive market caps, and since they're all up hugely on the year, they're literally what's holding the S&P 500 up. So this trade that I'm in, just from the last hour, Apple's gotten a pop in price. I mean, literally trying to get bearish on these things has been a pain in the ass. A major pain in the ass. That news that we got should not have caused a bullish spike like that. And looking at trend dynamics and everything, I mean, lower highs, lower lows, all of that good stuff. But for the last 3 days, this thing has gapped down, but closed up. Gap down, closed up. Gap down, closed up. Today's the first day in this 3-day sequence or 4-day sequence that you're gapping up. So maybe I'm wrong. Maybe Apple just trades up to daily res around 177.57. Obviously, daily res is right where the 21 exponential is, but you're under the 50. I mean, everything says to go short, which is why I'm holding options positions, because it's not something that, I need to trade. I need to, get rid of today. It's, as a matter of fact, I mean, those positions will be in profit at the market open, but how much am I going to lose based on where we were yesterday at the close? So these profits are where we were yesterday at the close. That is not going to be the current P&L. All right, this is going to drop, this is going to drop, and this is probably going in the red. So I'll probably end up closing them down just because I'm tired of sitting in Apple. Here is the days that I have been in the position, right? So literally I've been sitting in this for 9 days, this for 7 days, this for 13 days, and I just put that one on yesterday. So it's like, at some point, man, I got to cut my loss or try to take some profits. Yesterday would have been a good day to do it. I just didn't do it because I honestly thought that we were going to see downside continuation today. And we still may, right? There's nothing that says that the market won't roll over right here. But the problem is there's nothing fundamentally or nothing that I can use to take a position here. Like, there's like literally nothing. You've broken above all near-term resistance. I mean, this could be considered a trap, but at the same time, getting positioned is difficult. And every time anybody's tried to short this thing today, they've gotten screwed. So the London session was a buy, right? The London session is from 2 a.m. to 3 on in. So 3:30 right there, 3:45, boom, low a day. And it was bought up. And you've seen bullish continuation since. So, I mean, it's hard to argue that today's going to be a bearish day based on yesterday's price action because London thinks today's going to be bullish. But I have seen London do one thing and New York do another, right? I mean, you can see the trend is down longer term, right? So we would typically expect for that continuation to take place, but the bonds are up. ZN bonds are up. I can pull it up for you real quick right here. There's your bonds. They're up. They're soaring today. So that's going to be good for the market. They usually aren't correlated, but a lot of red days in the bonds, a few red days in the S&P 500s. Now, this dotted line right here is the monthly volume weighted average price. Pull it over a little bit more so you can see that yesterday the NASDAQ did in fact close under that. So that could be a reason to take a short, but I need it to come back up, right? I can't just chase price down. Plus, this is typically an area that I'd be looking to buy if I was bullish. I just ain't. But my bias does not matter. My bias does not make money. What makes money is risk management. Yeah. You got to know how to manage your money in order to make it. You can't just go out there and take trades anywhere and everywhere. There has to be a reason for it, a specific price level. And I just don't have it. I do on Bitcoin. If it fails to close an hourly higher, that could be enough for me to take a short on Bitcoin. So, I mean, it's bullish on the day, so you're fighting the trend by even looking for shorts, right? Well, technically, no, that hourly closed higher, so no, there's not even a short trade on Bitcoin. I mean, you're into daily res, and one could argue that if you wanted to take a short, that would be the place to do it, and I would agree with you 100%, but not against an asset that is currently bullish on the near term daily and weekly time frames. So the trend is your friend, and that's the way you typically want to stick. So, I mean, yeah, I'd like to get short this. I would like to see it finally roll over and go back down there and take out those lows, but obviously you're going to have two-sided trade. And we've had two-sided trade, a lot of it, right? So it's been a difficult market to trade, no doubt about it. No doubt about it. But I think the majority of the risk is with the bonds, with the TLT. Like if banks and stuff have to start unraveling their positions, that's going to cause a massive squeeze to the downside, long squeeze, if you will. That'll cause literally banks to start dropping like flies if that starts to happen. But listening to two professional bank guys yesterday, they don't think that's going to happen. They think everything's fine. Higher for longer seems to be working, according to a lot of macro guys. But I don't see it how. Like if we miss a recession, it's literally going to be crazy. Actually, one could argue that we are in a recession right now if it wasn't for GDP numbers. Like the GDP numbers are the only thing that's keeping us from being in a recession. All the other numbers and the job numbers. So you got labor and GDP. Everything else is shit. Everything else says recession. All right. Let's see here. Good mornings. Good mornings. Good morning, DGens. Trade talk. 0 day to expirations, baby. Yeah, go ahead. Have fun with that. I tried that last week. It didn't work. I know all about vertical spreads. Tesla John. Nice. Awesome. Yeah, they're called vertical spreads, put spreads, bearish put spreads. I mean, there's so many things for one option strategy. There's so many names for them. It's like trading, like everything that has to do with trading. It's in options as well. And people like call something some kind of crazy ass name, and everybody else thinks that they're super smart, but in reality, it's something that traders have been using forever. All right, let's see what the S&Ps do on the open. Like I said, I mean, I can't really buy it here or sell it here. I could buy it down here. So if we could get a spike down here, then I could take a long, or if we get a spike up there, I could take a short. But right in the middle of the range, I can't really do anything. But what we can do is if we do have or start, because we got a whole day of trading ahead of us, right? This is the same asset on the 5-minute time frame. This is your 21 exponential. I mean, this is usually an area where people will look to buy. I just don't, right? I need static price levels in order to take positions. I don't take positions based off of indicators, but one could, arguably, right? You could. There's your intraday VWAP, volume weighted average price. So yeah, you're green on the day. Green on the day. NASDAQ flying higher, making a fresh daily high. Over here is your daily on the NASDAQ. Like I said, pushing back up through the monthly volume weighted average price, which would not be so bearish. The XY had a nice little pop, but it's looking like it's getting faded. There is a level on the DXY that we are watching. If you just showed up, we're going to see if this level holds, if we even get there. But that is going to be daily demand right there. So if the DXY is going to bounce, I mean, it's been consolidating in this range for some time now. So I would like to see it happen pretty soon. I thought it was going to happen yesterday. I mean, basically, we're sideways on the week. Literally, we've went nowhere. Here's Friday, Monday, Tuesday, Wednesday, and Thursday. We call this piano keys. Piano keys, because it's just up, down, up, down, up, down, up, down, up, down, up, down, up, down. It's not easy to trade that, right? Not easy to trade that. But obviously the dollar had a massive bullish trend. So maybe it needs a pullback for a few weeks before it decides to start running again. Maybe everybody feels like we're not going to have a recession, and then they start to get out of the dollar. Who knows? The yen, what in the hell was that? The yen could go that's a sound I've never heard. The yen could go a long way in helping the dollar get some downside if they were to intervene, seeing how their currency is getting absolutely slaughtered. I mean, it's so close to those lows. So close to those lows down there. So a lot of people trying to short USD JPY right now based on the fact that they think that they are going to intervene. But we have not heard anything. The short that I'm currently in is from last year. Last year. So I already took all the profits out of that trade. Then realized I was okay with losing. I'm just leaving it on just in case, right? You never know. They could come out tomorrow and be like, we can't have our currency trading this low, so we're going to sell more dollars. Booyah. But this also came at a time when the dollar had almost like a blow off top as well. Dollar just broke out of a long-term accumulation formation. I expect the dollar to continue up. Just when and where, Who knows, right? Who knows? We got levels. We'll watch those levels and we'll keep moving on. Weekly support, pretty much right there. I mean, if you think about the run that it had, 12 straight weeks to the upside, and on the 13th week it was a pullback, then a bullish week, and this week you're just pulling back. You're trading inside of last week's range. And that's the trouble with most of these assets, right? Inside week, where's the NQ? Inside week, well, no, we did take out last week's low. That was the low. So on the NQ, we did take out last week's low. So this is technically not an inside week anymore. However, if it closes bearish, it would be a trending candle, and we would look for next week to break down. Doesn't mean that it happened that way, because this obviously was a continuation or a lower low, and then you bounced up. So just because you made a lower low does not mean you're going to continue with that. That could have just been a liquidation for a move to the upside. I mean, on the weekly, this is bullish. On the weekly, this is bearish. Right? It's not bearish, but it just broke down from the 21. And anytime that happens to an asset, you know, we obviously know that this could be a bear trap, but 4 weeks in makes it less likely to be a bear trap. So it definitely needs to close back above the 21 before I'll start looking to sell puts on it and looking to get long on it, right? One could have done so at weekly support. I mean, that's weekly support. That's where you traded down to yesterday. Oh, today. That's why it's bouncing. That's why she bouncing today. At support, weekly support. Bitcoin's still trading around daily res, struggling. There was an opportunity to get long on the open or short on the open. I just missed it because I wasn't looking at the chart. We could take a short on Bitcoin at hourly res. Let's see if Bitcoin breaks down, closes bearish, and then retests hourly support or hourly resistance on the next candle. That would be the best way to approach it. So here's what I mean. All right, so right now we're kind of breaking down. The chart on Bitget is different. This candle did not close above this candle. On Bitget, these are straight across. So resistance held on Bitget. So what we could do is if this thing closes under this candle's close, then we could look for next hour session to run up to resistance. That would be the short side entry. But you got to wait for that to happen. Do not chase price by shorting it here because it could go up. All right. We need to see weakness in the chart and then we could get a retest. Now, if we get something like this, then obviously you won't get a chance probably to get a retest. I just have to wait for the next trading opportunity. I did take a short on this, but I'm going to close it because this does not look bearish. It didn't look bearish at all, but this is weekly supply. So I should have taken the trade off when that candle closed. There is an hourly supply zone right there, though. So if I eat this stop, I'm okay with it. I mean, I got all these other short positions on that are well into profits. Already have taken profits on most of them. Up there is the short on the pound. Got a long on USDCHF, but once it tagged the yearly open, it has been a one-sided market. Has to do with Swissy strength as well. It's not dollar weakness. See the Swiss franc, there's your strength. So that's what's causing USD Swissy to come off. But I mean, Euro's up 0.32%. That's not a big green day. I mean, there's nothing really. All of these currencies are trading within their one standard deviation. So, but like I said, the market just opened, so you got a whole day of trade still yet to go. So this will probably get stopped out, which is another reason why I don't really want to go long. I mean, short on the SPs. Looks like we're coming down. So we'll see what happens here. Let me go check the positions. They seem to be holding up. So typically the way I do this is once I reach 50% profitability, because when you do an option spread, the max profit is limited, right? I can only make 265 on the trade. So usually when I get to about 50% profitability on the trade, I'll go ahead and take profits, close it out, and look to make profit, or go ahead and take the profits. Because if you look at this, that's on the XLK. Let's look at Apple. All right, so this orange curve is my profit. All right, this is green thing right here is where price currently is trading. So you can see how the curve starts to, the tail end of the curve starts to go real slow. Like the steepest part is right through here. So roughly around 50% you want to take off, because you're going to sit in this trade forever just to make those last few bucks, right? And there's no point in doing that. Why even risk losing all of the profits? So once I get to around 50%, I'll take profit on that trade. They do have earnings coming up on November the 2nd, so I would like to get out of it before that happens. This is just a short call, right? A short call, 46.50 short call. The most that can be made on this trade is 45.50 times 5. Oh, sorry, 45.75 times 5. 228.75 is the max profit. And I'm not going to sit in this trade for 92 days just to make max profit. So once this gets to about 50%, I'll take that off as well. The XLU short, it's a long put. Let's go look at the XLU and reason I took the trade. And since I'm getting beat by the trade right now, one could arguably go ahead and take it if you wanted to. All right. The reason I'm taking it, obviously, utilities getting beat up. It's been bearish all year outside of a couple days at the beginning of the year, trading in a longer term sideways range, and this is your fresh breakdown. So we look for that trend to continue. And we got daily supply. It is being tested right now. See, we traded up to that, almost to the 50, and then we got a breakdown. So you could buy the 59.50 put, and that would be in the money. Let's see if that's the one I bought. Yep, I bought the 59.50 put, and I bought it 43 days out. So here is the expiration on the XLU put, December 1st, 43 days out, and it's just the 59.50 strike inside the money. One strike in the money. This is a very slow moving stock, or index product, so one can manage risk very easily on this position. The way that I manage risk is since I deposited the $5,000, the account is up 22%, 21.5% on the year. So the way I manage my positions is I simply say I have $6,000 in the account. I started it with $5,000. So now at $60, that would be my risk. So if XLU gets in the red by $60, I close the trade. And it's a slow mover. Like I said, it's very slow moving. So, I mean, you'll see it change like by a buck or two here and there, depending on what price is doing. And currently today, it's moving up, but you gap down. So we'll look at this as an opportunity to get short again, and hopefully it rolls over and just continuously banks the money, man. Makes the money, dude. So I don't have any long positions, and I should, because that portfolio is completely, totally bearish. So Apple again, gap up. So we'll see if it closes up on the day. But I mean, yeah, nothing major really happening here. Amazon's up 2%. Netflix up 14%. They had earnings. Let me see here. Fiscal dominance. Everything seems backwards because of it. Can't drop when the treasury deficit is blowing out. I don't know. Maybe. You could be right, Brandon. I mean, you would think the Fed taking liquidity away from the market would make the market bearish. You would think. So, Uber. Yeah, I don't like it. Let me see if it's in the support. No, you're not. You're below support. You're probably going to close below the 21. I mean, one could argue that is a bull flag, but it needs to hold the 21. Last week you did, this week, I don't know. You're literally trying to buy a falling knife. There is no reason. Daily support, I guess, would be the only thing you got. So if it tests 42.11 and holds, then I go for it. Does Uber have weeklies? They do. Uber's also got earnings and November the 7th, so keep that in mind. XLB. Materials, no, I'm bearish on this. You're under the yearly opening range. It's bearish on the year. It's under the 21 on the weekly too, probably. Way under the 21. I mean, the only reason I could get bullish on this stock would be for a reversion to the mean. But, like, once again, falling knife. In fact, I would say that it's probably going after this low right here. So I would need for at least that to get liquidated first. And then I would need to see an automatic reversal, instant reversal. Tesla's down on their earnings. Damn, should have put a put spread on Tesla yesterday. That would have been a banging trade. Tesla's one of the only two of the Magnificent Seven that have not taken out their August lows yet. Netflix did. Nvidia is the other one that has not taken out August lows. Microsoft already did. Oh, Meta as well. Shit, there's three of them. And like those are the ones that are continuously giving strength to the market. Let's go look real quick and see what Market Watch looks like. Not the heat map. Why do you keep going back to the heat map? I don't look at the heat map ever. Wow. Stocks are not doing anything, but you have 55 advancing, 46 declining in the S&P 100. I use the S&P 100 instead of the S&P 500 simply because these are the biggest stocks in the S&P 500. So like however this goes, so goes the S&P, right? So one would be able to say that it's a mixed day for sure, right? Mixed day for sure. There's your Netflix candle. It's literally making all these other candles look like babies because it's up so much. 16%. They must have really blowed out earnings. Well, even Walgreens is up. Even Walgreens is up on the day. Ah. Barely. I knew I should have sold a call on that. RSPD. Yeah, this has got downside continuation. I look for this to go lower. I mean, you're going lower. This has no liquidity in it at all. None. I would stay far away from this. RSPD, RSPD. So I got the ticker right. There's no weeklies on it. Stay far away. There is no liquidity in this thing at all. At all. I'd stay away from that. Stay far, far away. Yeah, when you see this, I mean, these are ticks. That's just a literal tick, tick, tick. That means there was nobody in between. No market maker in between. Wide bid-ask spreads. That sucks for something that's this small, right? Like you drop, what is that, 4 cents just because the next bid was there? One person bought there, one person bought there, one person bought there. Like, ugh. No. Stay away from this, Brian. This is very dangerous. Because you could go in there with a big enough position, you won't be able to get out. Unless there's someone willing to buy it. And on the long term, I don't see why anybody would be willing to buy this. Other than it's coming down to the bottom end of a longer term range. But it needs to come down more. I mean, if I put a trend line on there, it's broken down. There's no way I can make this bullish. Now, that's not to say that it's not going to turn around at support. It might, but you're trying to catch a falling knife again. So, I don't know. I don't know. I don't like it. Stagflation. Yeah, I got you. Too much government deficit spending fuels GDP. Yeah, that's what sucks. I understand all that. That's why GDP ain't down. I understand when your government's spending is causing GDP to stay high. That it only all the Fed needs to do is hike a couple more points and they'll bankrupt the government. I mean, it's as simple as that. The people running this country right now are literally freaking out of their minds. Either A, they are all too old and they have dementia and they don't remember how a country works, but it's like a business, right? You're supposed to have a surplus, not a deficit. Stupid. They're all terrible. Everybody that votes to spend more money is it's so bad. Breaking this country, literally. On purpose, it almost appears. Good mornings, good mornings. The sound was TOS. Why, that's a new sound. I've never heard that before on TOS, but it's Charles. It's owned by Charles Schwab. Every time I sign on a TOS now, they're like, you need to transfer or open an account at Schwab. I'm like, no, I don't. But I think I won't be able to use TOS if I don't, so probably should, huh? Probably should. Netflix gapped up big. Yeah, they beat earnings. The top line, the bottom line earnings beat was not very big. It was just the top line. See, the top line was a huge beat, 6.93%. Down here, not so much, right? 0.04. 0.04%. So it's still a beat. It's just not a big beat. The big move up was from this right here. Those are big numbers. That's a big beat. Big top line beat on earnings. It'll probably get sold off. But I mean, you could buy a bearish put spread on it. That way you're not risking too much. Let's go see if we can put one together. Hopefully the implied volatility has dropped. It has not. We would have to go way out here at like 57 days out because the implied volatility is cheapest. It's not the cheapest. Obviously, I see that there's a 41 there, but that's a year out. You know what I mean? You're going to pay a lot of money for that. So we can look at the 57 days out, see if we can put together a bearish put spread. We could do $10 wide, see what it would look like. So the max risk is going to be $655. Max profit $845. I don't really like that. So let's bump them up. It still looks about the same. Obviously less risk, but it's also gonna be less profit because the narrower the spread. Yeah, so this is similar to the Apple trade. I don't like to put on put spreads or call spreads for that matter for more than 100 for more than $1.50. I generally don't because that means because if especially a $5 wide spread because if you can put on a $5 wide spread for $1.50 that leaves what $350 of profit on the table. So there you're risking $150 to make potentially $350. When you have a $5 wide spread, the most you can make is $5 minus the debit paid. You're paying $2.30 for it. So it's like a 1-to-1 risk to reward. So, but all you need, let's analyze it. Let's see how far it needs to go before we would be able to take profits. So we would need it to get down 365. No. So we needed to get down to 360 in order to be able to take 50%. 360 is right there. So literally it would have to come all the way back down to there in order to make 50% profit on that. Let's give it a couple days. Let's let that volatility shrink down a bit. High IV means you're going to pay extra for the premium also. And with the skew up, that's also going to cause us to pay well, the skew's back down under 139.52. So VIX up. Skew down, VIX up. It is up. It's at 19 bucks. You would think that the VIX would be coming off much harder than that. Yeah, you're trading sideways, dude. Today's probably going to be an inside day, which sucks. Which absolutely sucks. Because inside days are choppy, garbage, no trend. But the Powell speaks today. That's probably what's going on here. Right there. Mr. Powell speaks at 12 o'clock noon Eastern Standard Time. I don't know where or if you're going to be able to watch it, but I mean, it's probably not going to be like a live thing on the Federal Reserve's website, but he is speaking somewhere. And then you're going to have Bostic speak and then Harker. So, I mean, that's going to be at the end of the day. So that doesn't matter. Yeah, I mean, this is it. Existing home sales is came in and nothing really happened based on that. Existing home sales came in, it was a beat. A higher than expected reading should be taken as positive bullish for the USD. So we've gotten more positive dollar news today than negative dollar news today. But yet the dollar is down today. But bouncing right from the Heath level there, which is typically what we look for. Yeah, that would have been the entry there. I still haven't been stopped out of Euro USD, so this might end up being a winning trade today. Well, obviously you see where my entry is, so if you want to take the trade, you could take it. Just understand that obviously this thing has got a lot of bullish momentum in it, so it would take the dollar literally getting back to green on the day for this trade to make any money. But we shall see. Where's Aussie dollar? Aussie dollar down on the day. Huh. Aussie dollar was so close to making fresh yearly lows, but it didn't. On this day right here, I almost thought it would for sure. But it didn't. We're short Aussie dollar from up here. Or I am. 0.67394. That's the actual entry. I didn't get to catch it though on this account, on the paper account. All these trades I have open in my live account. Good morning. Netflix gapped up big. Yep. Tesla support around 215. Mr. Tesla John. Let's go see. It's got a lot of bearish momentum today. Well, we had a lot of bearish momentum when the earnings were announced, but I mean, this is the August lows. It's not support, it's just the lows. You got weekly support coming in at 215.49. Yeah. Yeah. Now, will that level hold is the question. See, we can take these objective price levels and we do look for those levels to act as support or resistance, but they don't always do it. So keep that in mind. But yeah, you could potentially look to buy a call or something on Tesla, but just Tesla calls move very fast as well. Just like Netflix and Nvidia, they're high beta. So they're expensive. Even though the stock isn't expensive, the premiums always are. Because it flies. It's got very, high, a lot of gamma risk inside of that. Tesla is like my nemesis also. I don't like trading it because I have a very bad hit rate. And basically it was because way back here, I mean, I hold the stock long, but whenever I trade it, I seem to not do very good on it. I mean, we thought it was going to go when it broke out of this range. But that was back before the splits. This was like $279 and down here was like 150. And then it broke out, got a nice run, and then it just chopped sideways again right back into the range. And then booyah. There's that injection of liquidity from the Fed. Literally caused Tesla to go to the moon. All the stimmy checks, people bought Tesla and Bitcoin. Oh, gotta love it. Gotta love it. The trend is your friend until the bend of the end. Yeah, something like that. Until the end of the trend. Yeah. But I think the market's waiting on the Fed speak because literally it hasn't gone anywhere since we've been live. Same goes for Bitcoin. It hasn't literally done anything since we've been live. It's in the same exact place it was when we last looked at it. It's like doing nothing. This candle did not close under support, therefore I would not be looking for the short. Typically, the way I would do that, right, is you want to see this candle close under this one. And then on this candle, you would wait for a wick up to resistance, which would have been there. And then you would want to see it start to slowly fall or roll back over. And then that would be your entry point. Stop above the daily high. But this candle did not close under there. In fact, even though it's a bearish pullback candle, it closed as a doji. Indecision. Sidewaysness. Bitcoin loves to trade sideways until it doesn't, right? Boom. That thing went all the way to $30,000. But that was based on fake news. Fake news. Cointelegraph came out and said Fed approved, or not Fed approved, but the SEC approved an ETF or something. People were going crazy. But yeah, ultimately when they do, if they do, or when they do approve the ETF, I do expect that would cause Bitcoin to be bullish. But Bitcoin loves rate cuts, or zero net interest rates is what Bitcoin really loves. But As I've shown in prior streams and in prior videos, Fed rate cuts typically are looked at as being very bullish for risk assets, but it's not, because if the Fed is cutting and they're cutting because something bad is happening. If you just look at the S&P 500 and go back in time, put the Fed Reserve Fund or Fed funds rate on there with it, compare the charts, you'll see like the Fed starts cutting, then the market drops. Usually there is a pump, right? There's a pump before the dump. Like in the '08 financial crisis, the Fed started cutting rates almost like I think it was like 12 to 18 months before the market rolled over. When it did, it rolled over big. And then they had to cut more and more and more. So we'll see if that happens. I don't know if it will. I'm not a macro analyst. I'm a price analyst. I trade price. Price is king. So basically, what we need to see is we need to see some directional movement of some kind. Literally, we need something to happen. Until that happens, I guess we're going to be very slow today. I mean, you got a mixed marketplace. There goes the NASDAQ. So we did get a bounce from the Heath level, but that's all it was. It was just a bounce. You're not getting any bullish continuation from that. See, like how NASDAQ traded like right there at that VWAP for multiple 5-minute candles, and now it's going. Yeah, it did. It's just too risky of a trade to take, is all. I mean, it bounced from this level too, but then ultimately it came back. So clearly, catching a falling knife on that day would have worked. But typically it doesn't, right? Typically it doesn't work. But you're right. If you'd have bought $42 call, you'd be up $1. But it's hard to keep one asset on watch the whole time. Trying to actually get filled in a trade here. Does Uber have earnings? Yeah, they do. Um, yeah, it's in a massive range. It's trading inside of a monthly candle, but you didn't liquidate that month low, which would be July's low. It's the lowest low. So I would expect that to happen. Like, I'd almost be willing to put on a put spread on this. I wish it told me how much it's up. It's barely up 0.23% on the day. It didn't gap down though. It opened pretty much where it closed yesterday. This could be a buy. I don't know. You're at the bottom of the bottom end of a range. You could try putting on a call spread or something and just holding it, and hopefully before earnings it gets back up to $45, but it's not a big enough move to pay off on a call spread. You'd be better off just buying an outright call. Or you probably did already, so you're already out if you did. Yeah, there's no way to know that's going to happen because I can show you countless times where it doesn't, right? Where it does not happen. Like it didn't happen yesterday, for instance. Yesterday, it just down, baby, all day. All day long. It just trended down. Every time you tried to buy it, you got smoked. You got a little bit of upside, but then ultimately it's down. What a bearish day that was, huh? I can't short it at support either, so I mean, there's literally nothing I can do with this. Because I don't ever expect it to break down. Usually stocks do trade in a range. They range bound. They trade range bound more than they trend in most cases. I wouldn't say that's true for like the S&P 500, but like a normal asset, normal stocks or forex usually trade inside of a longer term range more than they trend. But I mean it does look like a reversal pattern. This is going to be your neckline of it. So if it breaks down, then I would like it for short side continuation, but I wouldn't trade it this close to earnings. Earnings make stocks too volatile because they'll burn you. I mean, think about it. If you would have bought calls on Tesla yesterday, those calls would be freaking. First of all, you'd have paid so much in premium alone just to get in the trade. And you wake up today and those calls would be freaking worthless. Damn near worthless. If you bought calls at the end of the day, 242 calls, you'd be down $20. That's $2,000 in the world of options. That's with one call, you'd be down $2,000. Ooh, that's why I don't like trading Tesla. It moves. You could put on calendar spreads and other kind of trades though to trade earnings for the volatility crush, which I will get those strategy videos out for everybody. Double diagonals, calendar spreads, stuff like that. That's how you trade earnings successfully. Because you're just looking for the ball crush. So you literally take positions on both sides of the market, and literally all you're waiting on is for the volatility to get crushed out. Because you've seen how much volatility was still in today, right? Like if we go out of here, today still has 143% implied volatility. Like I don't know how much implied volatility this had yesterday, but it was more than that. That's still way too much. Way too much. So in an instance like that, what I would do is I'd literally go out there and I would sell a call or a put. Even though it's got 113% implied volatility, the spreads are good. It's just there is no premium far out of the money to do it, to take the risk. And secondly, I don't have enough buying power inside of this account to sell options on Tesla or Netflix or Nvidia. So for instance, if I wanted to sell the 232.50s, I keep forgetting. Which I wouldn't do that because that would be way too close to near term price. And secondly, I would be too much afraid that the gap would fill. Like, you're probably going to find a low here and then the gap will be filled. More than likely. I know they missed on delivery. That's huge. That's pretty big too. So they missed on both the upper and bottom lines. So big gap down. You could probably see more downside continuation today, tomorrow, but eventually there will be a pop back to revert to the mean. And in that scenario, that's when you would want to be selling puts, probably, not calls. So if we go back and look, what do we have on the put side? Well, we do have more implied volatility. So with this implied volatility, the market says Tesla can move $6. So here's your ruler right here. So anything under that strike right there would be legit, would be in play. So, like, for instance, you could sell a 10 delta and it would be right around $58 profit. Look at the required buying power for this. $10,000. So I need to double the account and then I can sell it. Right? Yeah. So yeah, but that would be the play, right? Because this is going to go away tomorrow, the next day. Like, that volatility is going down. You can just look at the very next week and you can see how much vol crush there is just in the next week. You're going to lose half of that. So just by taking that trade, as long as price goes up and not down, you're guaranteed to make at least 50% profits on that trade based on that. But it has to go up, not down. Has to. So the reason this is up today, even though the market is up, is because of time, right? Each day that goes by, I make a little bit, as long as the market is well under where I'm at. But see, there goes Tesla. There goes the S&P. Still in the middle of the range. It just broke down below the VWAP. Bonds breaking down below the ESD band, which this dotted line is just a 21 exponential. It's like a Bollinger Band, but not. It's called an ESD band. The bonds were doing good today, but now they're kind of stuck sideways. Getting underneath that. Help the SPY do, or the SPOOs do the same thing. It's 10:23, so we're still an hour and a half away from Fed speak for Mr. Powell himself. But yeah, I want to see it continue to go down. But I would have just been able to love to get in a short position. hate selling or buying in the middle of the range. So it was where, so pretty much the VWAP is at 43.41. Right around the close of this bullish candle. If we get a retest of that, maybe I'll take a short entry with one contract. I'm not trying to get killed here live for the world to see, because it's in the middle of the range and I am taking a trade based off an indicator. It was set a limit at 342. 43.42. And then obviously we'll risk 43.42. I'll risk 2 points on it if I get filled. Well, let's give it a second here to see what it wants to do. I will take a little bit of heat on it. Like if it gets above it, I'll take heat on it, but I won't set in it and take too much heat, because it loves to play around that line a lot. Like it makes you think that we got a breakdown here, change in the trend. We got the SD bands turning down. We got the 21 turning down. So everybody's going to start looking for shorts now. But it could bounce right back up and be trading at 43.52 in a matter of 10 minutes. It loves to mess with people. And your Nasdaq has not broken below that yet either. So that's something to keep in mind. Also, something to keep in mind is dollar isn't going anywhere. It's sideways. If the dollar starts to fall back down, this will more than likely go back up. Dollar weakness is what caused strength in the S&P 500 today anyways. I'd love to see some big daily closes under that month-long VWAP. That would be fabulous. Fabulous. We could have downside targets of 14,900, which is going to be demand. Thank you, my love. Drink them if you got them. V8s. Good for you. Nobody's got any other questions? All right. I guess we'll see if I get filled. If it continues to go lower, I'll close that order. I thought I would get filled on this candle here, but I didn't. And I'm definitely not chasing price, because you're at an area that could be construed as support. I don't know what it is, but it's definitely acted as support. It's support there. It was support all through there. Well, if we would have got filled on it, we'd be up almost 10 S&P points right now, which would have been a nice little trade. That noise right there, that's Thinkorswim. That's the new noise. I've never heard it before. We could scan for some unusual options activity if you want. Unusual options activity. Not much. See, there isn't much going on today, guys. AMD next week. LRCX. What is LRCX? That's for tomorrow. Expiration tomorrow on that and Microsoft. Nvidia is usually always up here. People just taking crazy, ridiculous. I mean, that is so far out of the money. And they paid 49 cents for the call. $500 call on Nvidia. But at least they went out to November the 3rd. That trade has probably like a 5% probability of making 1 penny or more. They bought a shitload of them, 5,000 of them. It could be a short hedge, though. You got to be careful with stuff like that. Man, that would have ended up being a nice trade. So let's go ahead and get rid of this. As we missed it. Missed it by just a hair. What's the high on that wick? 43.40. And I had the entry setting at 43.42. So missed it by 1.5 points. But that's good because now you can see we're up on the day. Nice, nice, nice. XLK has literally just been the bane of my existence. This is the one I've sat in for the longest amount of time, and it's the one that literally has just been getting so close to being profitable, but then it's like, I'm just kidding. I'm just kidding. I know you need me under 168, so I'm going to trade to 168.5, and then I'm leaving. I'm going back up. Bastard. Literally. It's 4 cents above where I need it under. Right? Like, drop already. You know you want to. 13 days I've been in this trade. Why would I put on that position all the way over here? There would have been no reason for that. Like on this day, I could see why I would have. But that's only a 10-day hold. Price was just way too far away for me to take that trade. Something don't add up. Something just don't add up. Let's go look at the... Yeah. Yeah, there's no way. No way I would have put on that put spread when prices were down in here. So maybe Tasty's just wrong on how many days open it's been. Are they counting today? Well, it doesn't really matter because 13 days ago, literally, would be on this day right here. It topped out at 166.25. So why would I have picked the 168, the strike? I would have picked the 166, not the 168. So that doesn't make sense at all. Oh well. All I need for it to do is just drop. And it looks like it's going to. I mean, you took out the August lows. This is a lower high. We just need to get that continuation. Yesterday we got it. Yesterday was a breakdown, close down. We took out that support right there. There's got to be something else holding this thing up. Oh, the weekly 21. It traded down to last week's open and reversed. Yeah, that's what it's struggling with. Last week's open. So right there. But that also means if it drops, it'll drop all the way down to 165. If it drops, it will drop down to 165. And let's go see what kind of profits we would be looking at 165. Not much. $28. You got to get all the way to one standard deviation almost before you get to 50% profitability, which is 1% of the total account equity. A little bit more than that, but that's how you grow a small account. It's just this thing ain't working. It keeps getting where I need it to go and then turning around. But the other ones are doing okay. XLU's looking good. Let's go look at the XLU. Like I said, that trade you could have put on this morning when it tested that level. I said that when it was bullish and it was trading up into here. I was like, you can go ahead and take it right now because by the 59.50, that's what I put on yesterday, the 59.50. So that's good. At least I was able to call one trade today that's semi working out. I wouldn't exactly call $11 a profit phenomenal. All right. I think the chat's broken. The few ledges are broken. Nobody's talking. All right. Let's see here. Yeah, we're finally getting that drop. That's good. That's good. That's good. Wouldn't take any shorts on it now, obviously. But it could also bounce from here. This is today's expected move. Low. It's trading well within what the options market priced for today. I am still here, says Johan. Well, 27 of you are here. I can see how many people are here. Now 24. All right. So would we risk a long down there? Probably not because I have a bearish bias. Right. But if you wanted to, what you would do is you would just wait, give it time. Don't buy it immediately as soon as it tags that level. You definitely want to give it some room to play. You're in the bottom of the Bollinger Bands, and you're at the bottom of the VWAP bands. Very small day. You're back to red. Ooh, we could take a trade on the NASDAQ. Oh, not that one. This one. We can take a trade on this. I don't have the expected move on this thing, though. The NASDAQ moves fast. It has been known to wreck accounts. The reason I want it up there is because that's where the VWAP is. See the wick? It's a 5-minute candle though. Oh, 15043. Shit. That was a chance right there. 15043. 15043. Sell to open one contract. Gotta be quick to close this though. And we're filled. So buy to close. Market. What was the fill? 15043. So if we can get it to 33, that's down here. That's 10 points. That would be a scalpable. Watch up here. If we get to $60, we'll close them out because that's take profit, right? This number right here. Let's see. Go on. Push. Push, 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 push. Not back up. What are you doing? Going the wrong way. I mean, you just went from green to red, bro. Green to red. Let's go. A green to red move is what we want to do, especially right at the VWAP. That's a pretty nice setup, but it's going the wrong way. Like I said, I'll give it a little bit of room, but not much. That's the definition of a sideways day. You go from green to red, and then you don't get any continuation. It goes right back to green on the day again. Let's set a stop 15061. That's a pretty big hit. Just give it some time. Give it some time to work. It's still red. This is a daily chart right there. It's still red on the day. So from when the candle goes from green to red is literally what I'm talking about when I say green to red move. You got the VWAP right there intraday as well as the 21 exponential. You've already started your curve to the downside on the top edge of the ESD bands. So what I'm going to do now is I'm going to go ahead and throw a stop above the high of that candle, 15053, just because I don't want this thing to pop. I mean, look at that candle. If we get something like that, that's going to be a hell of a loss. And I don't want to take a hell of a loss. Giving it some room. It's got a higher 5-minute close. Yuck. 3 minutes, sorry. Come on, baby. Go on. Give me something like this. That's what we want to see. Give me one of them and we'll be day done. Day done. Stocks sometimes do respect those things, those intraday indicators. Sometimes. It doesn't look like it's going to today. S&P 500 is trying to drive back up. Dollar is, yeah, from green to red. That was in one fell swoop. You come back up, you retest the daily open, and then you roll over. You roll over. Talking to it doesn't make it happen. So I haven't gotten stopped out on the Euro USD short either. That's strange. It's probably close, though. If it doesn't go here in a minute, I'm going to just close it down and then it'll go. It's usually the way that works. No, Neo, look, okay. Yeah, I'll give it a look. Hey, not broken, just watching your USD. Can you look at Bitcoin again? Yeah, it is unfortunate. Yelling at assets does not affect price. I hear you. It is very unfortunate that that does not happen. All right, let me put a stop loss in and then we'll go look at those other things. 15.052.25. 15.052.25. All right, so we'll just leave this alone. And Johan wants me to go look at Bitcoin again. Ooh, it's starting to move to the upside, which doesn't bode well for my NASDAQ short. Yeah, I mean it's slowly but surely moving to the upside there. This is why you don't take it the short if you don't get to close under support. You take the short on a retest. You didn't close under support, so you got to leave it alone. I wouldn't have bought it there either, though. Right? But it is looking like it wants to make a high of day. Your USD still just playing around the 30%, 0.3%. So I've been in this trade for over an hour now. Usually after an hour, if it hasn't moved away from my entry, I usually close the trade down. because if it's not done it in an hour, then it probably isn't going to work. That's just my philosophy. It doesn't always come true, but that's, that's just the way I do it. And let's go look at Neo, see if it's regained any strength. It has not. So that big move that it got, it gave it all back. So would I be a buyer of this? Probably not. I mean, I would have been looking to buy in this area here, and since it had such a huge gap down, that pretty much tells you what all you need to know. Like, people sold the yearly open. So just as quick as they bought it, they were pretty much quick to get out of it, make $3-4 on it, and then exit the position. This stock doesn't have a really high short float, I don't think. Let's go look. If it did, it's over now. It's got 8.93% short float. That's not enough to cause a short squeeze. So I really don't see any reason to get long on this. And Bitcoin's just moving to the upside. So it's up over 1%, which is good. Typically that's what you want when you're long Bitcoin. I mean, if you just own Bitcoin, then you are technically long Bitcoin. Yeah, I don't like this. O42's entry, right? O43. So now it's getting really close to that stop. 52's the stop. Back to green. Back to red. It came really close to stopping me out. I mean, really close. 53 or 52.25 would have got me. Right there would have got me. I do like it lower, but I mean, it's just a sideways, small little range day. I mean, you're trading right at the open pretty much, which is a technical level that we do take trades at. I have taken many trades at the daily opens many times. If I thought it was going to have like downside continuation or whatnot. There we go. There we go. See the account, we just need it to get a little bit lower and we can take our profits and be done for the day. $60 is the profit target. And there we were. But we might get some continuation out of this. Best not get greedy, or else that happens. So I think the profits is probably also coming from Apple and that ES short call, because this should be up back in the 40s. But if it hits 60 again, I'm tagging it, because I don't need to get greedy. Remember, if I'm risking one to make one, I'm okay with that. Risk one to make two. Like if this candle would have just kept going down, obviously that would have been nice. It would have been continuation. But we are expecting a sideways day. We're not expecting a breakdown or downside continuation. We're expecting inside chop. When you're expecting inside chop, it's best to just get out at your target, because this is what happens right here. Literally hit my profit target, but I was not quick enough on the button, trying to get greedy. Yeah, this is just garbage price action. Garbaggio. Um, yeah, we looked at Bitcoin. It's moving to the upside. There is no trade on it, Johan. It's just, I mean, there was no trade on it. Buying daily supports could potentially been a trade, but I don't know if you, I mean, yeah, you did get a chance to buy yesterday, which you would have done the same thing pretty much as I did on NASDAQ. You would have bought the open at the day and then use the low of day as your stop. But you can't buy it up here, dude. Because the Fed could, Mr. Powell could speak at 12 o'clock, which is in an hour, and then ruin everything, right? Everything just shits to bed. And you typically don't want that. Oh, look, that green candle went down. So we will not be greedy again. All right, boom. Day done. It's a $6,000 account. That's 1% on total account equity. Nice. Day's done. And then we'll let these other positions that we're currently in work. If we can get downside continuation, then this thing is going to pay me. All right. We made $56 profit on the MQ trade, not 60. I knew it. Should have held it. No, I'm kidding. Don't ever do that. Always take your money and run. Don't look back. Don't look back. We have short side positions. This is a short. This is a short. This is a short. This is a short. And they're all paying. So we'll just let these work. If we get downside continuation on them, then we'll close them down and look to reopen new positions. But I want to look at Apple real quick. Yeah, Apple looks like it's struggling on the day. That's good. Yeah. Here's your opening price on Apple 176.02. 176.02 is the open. So if it gets under there, that'll be good for us. You can see yesterday it got all the way down to 175. So I need it down into 173s in order to take that trade off. And then the XLU, which we would have put on first thing this morning when it was bullish. And I said, if you want to get in it, go ahead and get in it, because this is where I got in it yesterday. Right? So I hope somebody bought that put. If so, give it a few days to work out, but do not lose more than 1% on that trade. 1% of your total equity. If you get to that in the red, you shut it down. All right? And then XLK is the last one. This one is just struggling. It will not stay under 168. And that's where we need it to get into profit, is under 168. So what I'll probably do with the XLK trade today is, if this thing closes above this green, does that look green to you? This yellow 21 exponential moving average, I will close the position. I would just go ahead and take a small loss on it, because obviously it's not wanting to break down. And then the very next day will be a candle that drops all the way down to 151. That's just the way it works, usually. Even once you become profitable, you will still have those days. It's because we don't know what price is going to do ever. Ooh, I'm glad I looked back at this before I logged off. Otherwise, I would have been a buyer up here. That would have not been good. All right, we're going to go ahead and wrap it up. You guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.